I'm particularly fond of the Dempster case study. And the case studies in general, I think, are the most interesting to me personally, because you really get to peer over his shoulder sort of as he's plying his craft, sort of like a potter at the wheel, right? I kind of think of the Buffett at his desk, sitting upstairs and in the office off his, bedroom, where his wife had put up the $ wallpaper, reading through the Moody's manual and coming across a Dempster Mill that's trading at, a fraction of its working capital, right? Net of all the liabilities, not to mention the rest of the PP&E and the like, and saying, that's juicy. Like, that's so cheap. It's almost impossible to think that, I could lose money in that, right? And then following him through the story as the stock just stays cheap. And so he just keeps buying. And it stays cheap, and he keeps buying. And suddenly he's got a majority position in the shares. And so he goes from board member, right, to chairman. And then you realize that, hey, this thing was actually pretty close to the brink, right? I mean, they had so much excess inventory. Like, their purchasing inventory people were probably the busiest folks at Dempster, right? Because they were just saddled with inventory, and the banks were threatening to seize their collateral. So here's a investment which the partners had no idea of in advance, right? We get the whole story after, right? But no idea in advance that 25% or so of their partnership, whatever it was, something in that zip code, was involved in a micro-cap windmill company in Beatrice, Nebraska, that was about to go under. And then you see, through Munger's influence and help, Harry Bottle comes in, and paints a line on the wall, right? And says, if the inventory isn't below this line in 2 weeks, everybody's fired or laid off, until we get it out, right? And then slowly repainting the line lower and lower, right? It's just a great story. And what happens there? Genius, right? The inventory comes out, right? That frees up capital. That capital is then used to purchase securities similar to what's in the partnership, right? Businesses are fixed, they're sold until all the operating assets of Dempster are gone. And all that's left is a securities portfolio. Then the business is deincorporated, right? And the securities are distributed to the holders, avoiding a complete layer of corporate tax, right? And fixing what would otherwise been a bankrupt entity, right? So he gets a lot of grief. And it's probably the reason why he's never done anything hostile since then. But you really see somebody going in, recognizing the value of the assets, converting them from something unproductive, excess inventory, to something productive, securities bought at a reasonable price, right? Fixing up the part of the business that's still, a going concern, selling it, and, getting out of the whole thing at a very reasonable return.